Bum, 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 bow. All right. I think we're live. What's going on, guys? Dave Duford here, Final Expense Agent Mentor at feagentmentor.com. I hope you guys are doing fantastic today on Monday. It is March 6, 2017, and we're back for another No BS Final Expense Sales Training Program. And today we're going to be talking about how to effectively and ethically replace existing life insurance when you're in the door selling burial insurance. So this training is specifically designed in mind for those agents that are new to the final expense business or really experienced, but really need to master what it really takes to be super successful. If you talk to a lot of agents out there, what you'll find is most of the top producers get about a third to even half of their personal production simply from the basis of replacing existing life insurance, which is kind of unusual because you would think, I guess, looking at getting started in this business, that you're just going to be selling a lot of burial insurance to people who don't have it. Well, that is not the case. The cool thing about this particular business, especially if you follow the path that I recommend as a broker, you're going to run into all sorts of prospects that don't know that they've got existing inferior coverage. And so what's cool about it is that you're going to be able to offer a lot of people better coverage at a better price than what they ever imagined because they only got one particular option to begin with. Again, this is why I'm so passionate about involving yourself in the final expense business on a brokerage level versus a captive level is the best course of action as a producer. In fact, I'm of the persuasion a great captive producer can be an even better and more successful broker simply because not having one carrier to be pigeonholed in makes a tremendous difference in the success rate of you closing more of your leads into sales. And I'm actually going to give you a couple of realistic scenarios that I experienced last week. But one thing I wanted to do is cover these glasses here. I thought you guys get a kick out of this. As you guys know, I do a lot of sales training, and I'm always thinking of ways how to improve the sales process. And I bought these glasses. You may be wondering, well, how do these glasses have anything to do with final expense training? Well, if you can check out real closely, I found these buried in the back of my cabinet. And I don't know if it's focused up here. I'm sure it is. But you see those two holes? These are some cheap Chinese knockoff camera glasses. Believe it or not, you can actually turn this thing on, wear them, and then right here is recording everything that you're seeing. So it cracked me up because I was looking for ways to do door knock training. And I showed these to my wife after I opened them up and I put them on. I thought, dear God, how could anybody take me seriously with these horrendous spectacles on my face? I don't think I could get into anybody's doors. It would be training of how people slam the door in your face because you look like a total spaz. So anyways, I'm taking these damn things off. But I thought it'd be funny to share that with you. So anyways, let's get back on track over here. I'm going to tell you about a couple of sales I made last week where if I wasn't a broker, I wouldn't have made those sales. And the point of me telling you this is to drive home the important point as to why you should replace. So my very first sale, I had a ride-along guy from Wisconsin. Peter, if you're out there, thanks for joining me, man. The very first call we went on, I ran into a lady who had just purchased the prior day a policy from the company named after an American president. Leave that up to you to figure out who that is. And was paying $109 a month for a $15,000 plan. Very healthy woman. At the end of the sales call, I was able to get her $20,000 with another company of mine, very competitively priced, for $101. That's right. I gave her $5,000 more in coverage, and lowered her price by $8, if not even close to $100 a year. That's money, and that's more money in the pockets of her loved ones. If I was captive working for that particular carrier, I would have not made that sale. That would have been $1,200 in production down the drain because of a limited set of options. The other one here, I had a guy that had a policy through a carrier that is very popular in the final expense market. And because I knew how to position my particular product, even for a slightly more premium per month, I was able to get him grandkid coverage for free at no additional cost, as well as double indemnity. He was sold, and I made approximately a $650 annualized premium off of that, just because I knew what to ask and what to say and how to position, so that the replacement was a value added to what the guy had. Then I had another woman who was paying on a policy that was about 6 months old, very good health, and was interested in more coverage for the same price. I quoted her and got her $1,000, actually $1,200, $2,000 more for $4 a month if she rolled what she had into mine and dropped the former one. And she did. Got approved, wrapped up the deal before I left. Would not have made the sale if I was captive. I don't even know if I could have sold a $1,000 or $2,000 plan. And this last one I made, this is just a small selection of what I did last week, but all because I had options and that I was willing to go out there and try to replace. This last one, dude was taking medications that were very difficult with certain carriers, and I was able to get him something reasonably priced for a simple cremation plan. Had I been with the company named after an American president, I know that instead of $25 a month, it would have been $40 to $50 a month. And because of that particular medication he was taking, would have put him into a 2-year waiting period product, whereas now I can get him first day full coverage, and did. So I say all of this because replacement is absolutely vital in order for you to maximize your sales opportunities, not just for your own sake, to make more money, to make more closings, but also to help your clients out to get them a better deal. This is why I call this ethical replacements. What we don't want to do in this particular business is go out and replace for the sake of replacing. We don't want to take a policy that is fully covered, that gets full coverage for the client, who has health problems, and we're putting them into a plan that may limit their coverage for 2 years, but maybe they're saving a few bucks. It rarely happens that way anyway, but the point is that we do not want to do any harm. It's almost like the Hippocratic oath that doctors take. We want to make sure when we make a replacement sale that we're measurably benefiting the prospect by their selling or buying from us and getting them a better deal in the form of a better price or better coverage. And what happens is the most common reasons people replace, and again, I don't mean to beat the dead horse here, but this is why it's so valuable to be a broker versus being captive to anybody at all. I'm picking on the company named after American president, but even if I was stuck with one of my companies and no other, I would still be in the same standpoint in many regards, just because I'm limited. I'm pigeonholed with a carrier with limits on coverage and pricing. But as far as what we see most likely as being reasons for replacements, typically revolve around two particular things. Number one, the existing coverage is overpriced, okay? Or number two, the value of the coverage is inferior. And what I mean by inferior is it doesn't give full coverage from the first day in many circumstances. And what's great about being a broker in this business and going after these replacements is that, as I just demonstrated, many of the replacement options that are out there you would not necessarily get if you were captive and married to one carrier. So when you have options, it gives you more opportunities for sales. And the thing is, in this business, is as cool as it sounds to sell a third of your business as sales that come from replacements, it doesn't take a rocket science or even a great agent to get and yield a lot of these replacements. It is life insurance really comes down to, or at least whole life burial insurance, it is a commodity to some extent. People don't really even buy the products per se as much as we're selling them on buying from us. As a lot of you experienced guys know out there, you'll go sell stuff that nobody has ever heard of, right? They've never heard of these companies before, and they'll never hear of them again. But it's only because they trust us and feel like we're an authority on the subject matter that they trade off what they have for what you got, because this guy knows what he's talking about, okay? And so by replacing and being a broker and having options, you come up with so many more options for more sales that it's just crazy. And so it's since these products are commodities, and most people that we see and sell to operate in the world of limited income, of living on one check a month. These are the buyers in massive final expense. you're playing to a disposition that they already have in their mind, which is, I want to get the most value for the limited income that I have. Again, being a broker, you're not pigeonholed with one carrier and have to use, extra sizzle to the steak type of options to sell a product. You're selling extremely and specifically based on the value you can provide and freeing up their tied up premium dollars and letting them have it back, or by getting them more coverage for the same price. So we'll see this, and what I'm going to talk about now is how to get to that point and how to demonstrate that what you can do for them on paper and verbally describe it. So looking at my notes here, where I learn out so you may be asking, so what point do I ask about their coverage, and then if I know about the coverage, what point do I make the appeal to make a replacement? I'm of the persuasion that the best thing you can do is get the facts early, and then don't spill everything out up front. Build value, build trust along the lines, and then show them what you got, with a little shock and awe when you see the difference in pricing and coverage. And then show them a couple options on what they can do if they replace their coverage for a better deal. So for example, early on in the process, especially when I'm teaching final expense, there's 4 parts to the sales process if you've never seen it before. There's the introduction and rapport, the fact finding, pre-qualification stage, presentation, and closing. We're in stage number 2 here, which essentially is deriving the information from the prospect as to why they sent the card in, what they're looking to accomplish. And part of that is, what are they doing currently for their life insurance? And that's how exactly I say it. So from there, I collect information on who they have their coverage with, what they're paying, how much their coverage is for, when they took it out. I'm writing all this stuff down. I'm not jumping and saying, oh, they're a bad company or they're overpriced. I'm not doing any of that stuff now. Part of the reason is I want to build more time where I can, again, engender more trust in them. But also, I want to make sure I'm not insulting their decision to buy from that company, even if they're overpriced and they're bad, because many of these people operate with limited knowledge and there's no reason to insult them. If anything, praise them. At least they got something versus nothing. But the idea here is to collect the information. And it's crucial. This is one thing you must start to do if you're not doing it already. It's extremely crucial that you ask the person. You say, okay, you've got XYZ company. Go grab your policy for me. Let me go ahead and take a look at it and see how it looks. 9 out of 10 times, I'll say 9 out of 10, probably about 7 out of 10 times they'll go get it. So let them go grab it, bring it back. And then what you're going to do now is review the policy. If you can't get them to get it, don't worry about it. You can come back to it later, or even better, if they say it's buried in the hoard pile in the back and God knows who's been back there in 10 years, get the information. You got the name of the company hopefully. And if you don't, you can get it on the bank statement. Usually the bank statement shows who it's with. Call the company directly. Get permission from the prospect to ask questions. They'll authorize permission from the prospect. And then you can ask specific questions about their policy as far as their coverage, the type of coverage, the price. Put it on speakerphone so that the prospect can hear. That's a really good sales strategy, because again, it's not enough just to claim. It's also, you must be able to prove by fact from what you're hearing here as you collect the information. So you can do that if you can't get the policy or if they won't get it or whatever. But the key thing here is to get the policy if you can and review it. So when you review the policy, I always just show them the basics. Even if I'm not going to end up replacing the deal, I want to build value with the prospect and say, hey, this is what you got. Here's what it costs. Here's the coverage. Okay, and then also look through the details with them. That just is a way to build rapport and trust, to show them that I know what I'm looking at and I know what I'm talking about. So that even if I don't get the replacement sale, maybe I can get a secondary sale and at least build trust in the process that, hey, I'm not the guy that's going to go after everything for no reason at all. So what am I looking for when I'm looking in the policy? So key things to look for is the effective date versus how much coverage is on the books. So is it a modified plan? Is it level coverage? Is it graded? These are all things we want to know. Then the most important part to look at is the very back of the policy. I always want to look at the actual copy of the application. The copy of the application tells us exactly what the agent did in the home when they took the application. Because a lot of times people say, yeah, I told Mr. Jones, the agent, I'm a smoker. And then you look at the pricing and it's so low that and then on the actual deck page it says non-smoker. you can show them on the application where you remember him saying that, right? Mr. Jones, yeah, he asked me about being a smoker. And I said, well, you see where it says right here? Why did he check you off as a non-smoker? Why would he do that? And you do this because you want them to, again, build trust in you, but also to cast seeds of doubt on what they have right now. And again, put them into a position of more likely hearing you out, to do business with you, and to buy from you if you can do something better than what they got, of course, but on an ethical level, to where you're going to position them to say, yeah, I want to go with the guy who actually takes the time to walk me through the policy, because they probably never looked at it before, but to also point out the weaknesses in the policy that could put me in a position to where my family could be harmed because I got the wrong deal. So you want to take the time to do that. And again, I can't say it enough, not just claim what's on there. You want to get right by them, side by side, show them what they've got on each page, and if there's any particular things that are off, you need to show them. Let them read it for themselves. Everybody's a doubting Thomas. You're a salesperson. You're held with skepticism, and you should be. So you should develop your approach to counteract that. And the best way to do that is just by showing, not telling. That's what's great about this business. It's the most persuasive thing you can do. So what are the things I'm looking for in a policy in the application page when I'm reviewing it? I'm looking for the smoker and the non-smoker questions. Those are the most prevalent, what we call clean-sheeted parts of the application, where an agent may lie and misrepresent what the client told them, because they're the ones filling the application out. The agent is in most cases. I'm looking at health questions based on what they told me and matching up to what they have. If you get really savvy, especially if you're a broker replacing another broker's products, look at the height and weight chart. A lot of people, excuse me, itching in my eyeballs here. A lot of people, a lot of agents BS the height and weight. You know, they're 300 pounds, 5'2", and they need to be 285, 5'4". They'll make the difference in order to make the adjustment, in order to make it appear on paper that they actually have, whoops, sorry guys, got a call here. Put this on mute. That they actually have and qualify on height and weight. So it's important you catch that, because, sorry guys, technical difficulties here. All right, there we go. So it's important that we check that and make sure that, you check the height and weight, because that is commonly BS'd, okay? Additionally, let's see what else here. Prescriptions usages as well. It really doesn't happen all too often that health questions and prescriptions get looked over by the insuring company. Many times they catch this stuff, but if you got somebody who gets their prescriptions from the VA, they do not report to the Medical Information Bureau the prescription check. So I had a guy who got qualified for one of the lowest price carriers in Georgia, and this dude had every imaginable health problem under the sun. And he ended up, and he had got all of his, he had like COPD, he had nitroglycerin, he had heart problems. And he flat out told me, I said, man, dude, I don't even know how you qualify for this, but if you die, they're not going to pay. You're not supposed to have this, And he says, yeah, well, the agent told me, I'm a veteran, so they're not going to see my stuff and just tell me no. And I just went along with his lies. He flat out told me he was BSing the company. So stuff like that does happen, but the most common things you're looking for are they covered from the first day or not? Do they smoke or not? And then is there any health questions that are off kilter? Mostly the smoking, mostly the quality of the coverage. Okay, so where do you actually present the replacement opportunity? So this is something that I save for the last. I may tease at it earlier, and I'll tell people, hey, look, this is more in the introduction report stage. You say, what makes me different is that I'm a broker. What that means is I shop around to try to find the best price and coverage. And many times I can get people like you more coverage for the same price, or the same coverage for a lower price. Either way, I can give you more for less. So, and I might be able to do that after looking at this particular plan. Then I go into the health questioning. I tease it. I get their interest perked, but I don't show it all out in the beginning, okay? This is like a tease, right? We want to keep their interest peaked and carry them along the line, getting them, and this, I only do this if I can do something. We want them to come follow us with the process to where we get to the very end and say, Mrs. Jones, I told you earlier I'm a broker. I might be able to save you coverage. Let me tell you specifically what I can do. So right now you're paying $100 a month, $109 a month for 15,000. Because you're in such good shape, because I represent the most competitively priced companies on the market, I can actually get you more coverage for a lot less money. We're talking hundreds of dollars a month saved. So let me go ahead and show you exactly what I mean. So this is referencing back the replacement sale I did earlier last week for the company named after American president. I showed the woman a 15, a 20, and a 25,000. And what I did is I wrote the 15, because in some circumstances they may be wanting to keep the 15 but get a better price. In other circumstances they may want more coverage for kind of close to the same price, and then I put a bigger one just to see if I could get it. Maybe she wanted more, but she just couldn't think about it originally with the first policy I'm going to replace. And now she sees how much cheaper it is to add another 10, maybe she'll go for that. So I say, look, here's your options. So out of these options here, I mean, you can tell you can either save a lot of money or get more money or more coverage for the same or even less price. So the process of doing this is very easy. All you have to do is we get you approved for one of these plans, and then after you get approved, we're just going to call the other company up and tell them to cancel your existing coverage so as not to draft you for it, to take it off the books. Make sure you got one company and one company only. My recommendation for you is just pick the one you think is going to do you best. Hey, if you want to save a little money for the same coverage, that's fine by me. You're going to save $400 a year. If you want to keep the same price about and add another $5,000, hey, we can do that. Or if you want to go all the way up to 25, that's fine too. Which one works best for you? So at this point, I presented the coverage already, the company and the details, and this is just right at the pricing, because this is where you put your money where the mouth is, right? What are they going to get for what they got to pay? And what they just pick, and I just explained to them, and some people are going to be reluctant with the replacement process initially. Oh, I got to do a phone interview. Oh, I got to call up the agent. Oh, I'm going to get harassed. A lot of these people have gone through this in some similar circumstance in their life, so it's not like they're brand new to this. So the key thing we want to do as an agent in the replacement process is emphasize the easiness of it, that it's not a big deal, that you're going to help them through the process and then actually get the deal done. Hey, Sam, I see your question here. I'll answer it in just a second. So the key thing is I'm wrapping up my portion of the presentation here. And by the way, if you guys got any questions for me, replacements or anything else, feel free to type in a question like Sam did in the comment box. I'll be happy to address it right here. So the key thing in this particular circumstance is before I leave, first of all, I prefer to use a carrier with a point of sale interview on a replacement, because I don't want to replace the company, not sure if it's approved, and then find out it gets rated up because of some unforeseen health issue or something comes up that I didn't expect. And so I want to know that she's approved before I leave, and then I can get rid of the incumbent policy and get rid of them entirely. So once I get them approved, we call up the company, we get it canceled, we get it taken care of right then and right there, and we are done and it's over with. So that way you want to make sure that incumbent policy is out of your house before you leave the house. Can't tell you how many times, me being lazy at times, decided, well, I'll just let them handle it later. What happens is they wake up the next morning and are like, oh, I don't want to call this company and go through this. I'll just cancel this other one. So you got to get rid of the other company if at all possible. Again, I don't do it if the replacement situation is based off of a non-point of sale carrier, but I would definitely do if it is, and it's worth the extra 15, 20 minutes to make sure you've secured the sale and prevented that other agent from coming out and trying to save it, as many of them will try to. So question time here. I got one from Sam. How you doing, Sam? Sam asks, when you do a replacement, do you do the same four-step process, as in probably he means the same four-step sales process, or do you modify the presentation a little? It really depends. I'm of the persuasion, for the most part, Sam, that you should follow the process as it's described, because just because you get a little bait for a sale doesn't mean you shouldn't go through the steps, okay? Because even if someone says, this thing is expensive, you immediately, or you see said company I've been mentioning, you're going to immediately think, oh great, no, I can easily save this money. It's like there's blood in the water. And you want to get a situation down where you can possibly replace it. And so what you don't want to do, and what people tend to forget, and I've done this too, is you got to build value. You've got to build trust. You got to let them know that what you're selling them potentially is identical or better. Either it's identical and better price, or it's better and the same price or less coverage, or less price and more coverage, or something like that. You need to make the comparison to what they've got, compare it, and then explain why it's better. So you're really not missing a step, because of course you've got to properly introduce yourself. You've got to add value through building rapport and trust. You've got to fact find. At this point, you've already had to get to the life insurance question, existing life insurance question. You got to ask all the health questions, because we don't even know if we can qualify them for something better. They may have the best thing. And then lastly, we want to know if they got a bank account, so that limits our carriers if they have a direct express instead, and what their budget would be if they're comfortable paying for something, if they want to lower the price or something. Budget, I may not ask that, because if it's a replacement, I'll probably ask the budget question. But I definitely want to build value. I want to actually go through the process of presenting the coverage, what we do, how it's different, and take my time getting to that very end, where I'm going to tell you, like I go back to where I said, I told you earlier, I'm a broker, I can do a better deal. Here's what I mean, and here's how it works. So hopefully that makes sense, Sam. But yeah, you don't want to go too fast to try to close them before the value is built. You want to make sure that their opinions of what it is that they're looking at and what they're thinking about buying rest upon solid ground. And it makes sense for them, and they can understand why, but they can also see that you took the time to make sure it was right for them, and they'll appreciate that, and you'll sell more because of it. Hey, Bobby, how you doing today? I see your question. I'm going to read it off right now. Bobby asks, when you're talking to the client's insurance company about their coverage, do you tell who you are and state that you're an insurance broker? Oh, okay, so you're probably asking, correct me if I'm wrong, Bobby, if I'm calling the company up, like if I called the company that was named after American president, who I was and what I'm doing. Let's see, that's a good question. I think what I say most of the time is, yeah, hey, my name's David Duford. We're looking at so-and-so's policy. We're just asking some questions about it. Let me give the phone to her so you can ask permission. And so then the customer service person talks to your prospect, gets permission from them, and then I ask questions. And then once we know the questions, if they want to cancel right away, great. If not, then we just hang up. So I don't really address myself as as I'm the other guy that's trying to replace you. And the truth is, most of these customer service people recognize that when they get a call like that, where somebody's asking permission to ask questions like you should, that they probably know that you're some guy trying to, disembark them or get rid of them as the policy holder. There's one particular company, I won't name them, but a very popular final expense company. They're told by design in the customer service department not to speak to anybody if somebody begins to call and that's not the policy holder. They'll say, hey, we can't help you. You got to get your agent to call you. It's really stupid, but most of them don't do that. So if you're wondering what company it is, I'll let you know. They're a very big final expense company. And again, why do they do stuff like these cheeseball tactics? They won't even talk to the client if I'm in the house after I've talked to them. But why do they do this? Because the price is so over expensive. It's a ripoff, and they know it, and that's how they try to prevent it, because they get easily replaced. So, but yeah, I don't really do anything or say anything specific with that, because most of these companies, these people are just doing their jobs. They're required to talk to the customer when they want help. And many of the people, as we know, just don't get serviced, and they don't know anything about insurance. They're just trusting other people to do it for them. And so they usually coalesce and acquiesce and allow us to do what we do. So anyways, any questions you got, feel free to ask them as I'm wrapping up here for today's call. Key takeaways here. Please do your replacements. Please practice on asking for the policy. Make sure you show, not just tell, but show the prospect what they have. Do them a service and do yourself a service. Take the time to help your prospects out, whether or not you actually replace the existing coverage. Hey, I've done many policy reviews where I'm saying, hey, look, you got the best plan. Let's leave it alone. Let me show you what else we could do to add on to it. But hey, this is good stuff, and I'm not going to mess with anything. That's fine. So, if you run into situations like that, absolutely make sure that you do the right thing. That's why I call it ethical. Lots of insurance that I will never replace because, bad karma, it comes back to you somehow, some way. But make sure you show and tell what's in the policy. As you're making your case, think of yourself like a prosecution team. You have to provide evidence for your claims. Best way to do that is to show them in the policy. And then present what you can do at the end. Tease it along. Don't change your presentation from what you normally do. And then show them the difference in coverage and pricing based on whether they want to get more for the same price, save a little money, or get more even above and beyond that. Kind of a good, better, best type of approach. Last couple of questions here before I wrap it up. Hey, John, how you doing? Have you had any dealings with Senior Life in Georgia? Yes, I have, extensively. They are like the other company I was speaking of. They're kind of semi-captive. Sometimes some of them are captive, some of them are not. It depends if you're on their lead program. I think that their product's a little bit better than most of the captives that are out there. They've got a super preferred product. They've got a preferred. The underwriting's not too terrible, but it is somewhat relatively a little more expensive than what else that we see out there. So, if I can do something better for the client, I'm definitely going to show them what their options are and explain to them, what the situation is and why that's the case, why we can do something a lot better. I did get your message, Rob. Shoot me an email. I'll tell you who they are. Oricus123, would pre-needs be more secure than clients' wishes are going to be met rather than in a final expense policy? How you doing, by the way? My understanding is that the beneficiary of the final expense could change the wishes from burial to cremation, keep the remaining cash for themselves. That's a good question. Essentially, what he's asking is, what's the better deal for the client? Should they get a pre-need plan or should they get a final expense plan? Well, here's the deal. It's really not, it shouldn't be framed in that regard. People buy final expense plans because they can't afford pre-need plans many times. The one thing about pre-need plans is I think that, well, I don't know. I mean, they're life insurance plans. It depends on who the owner of the policy is. And now, if the beneficiary is a funeral home on a pre-need plan, obviously they get to dictate what the premiums or what the coverage is going to be, and they've written it out ahead of time. I'm not really sure. A lot of this comes down to, and I explain this to my prospects. I say, look, you're going to have to get, my recommendation is to leave your money to one person that you get from this policy, someone you can trust, because you're going to be dead. And you got to trust somebody that is actually going to do what they're supposed to do, what you want them to do, which is bury you as opposed to cremation or vice versa. And so you have to, it's incumbent upon you, Mr. Prospect, to talk to these people and make sure that your family, whomever you want to handle this, understands and respects what it is you're looking to accomplish. Maybe it's a little easier with a pre-need plan. It probably is, but I don't think it detracts from us making a sale. I think that's the key thing, because the markets we're talking about, pre-need is more of a middle-class market that has more money, that they're not in dire straits financially necessarily. They can afford a higher premium. Pre-need sells it at. That's really the driving force. Whereas final expense people typically just don't have a lot of money. They're forced to spend money on a final expense because they can't double or triple the premium that these pre-need plans want. And plus, a lot of these people too, they just don't want a burial or cremation. They want to leave money behind. Maybe they don't even trust their funeral homes. They want to keep the money in the hands of the family or the beneficiary. Hopefully that kind of answers your question. Andrea, what if the prospect wants to name all their kids, maybe 3 or 4 as beneficiaries, and the application only has room to write 1 or 2 names? Very easy. Good question too. What I do is, oh crap, I just had this happen. You see if I can, hold on. I got a stack of my applications down here. Hold on, guys. Let me see if I can find it. Oh yeah. Here's what you do. I'm so used to writing it down in the heat of the sale that I can't, call it up. But you say, you write out each of the names of the people, and then you describe the relationship, and then you add in divided equally to the survivors or survivor. So if I'm writing Bobby Sue up, I'm going to leave the beneficiary as their children. Billy Joe, John Doe, and Billy Idol, children of the insured. That's a relationship. Usually if they split it up like that, they're all the same thing. Children of the insured, comma, divided equally to the survivors, plural, or survivor. So that means if Billy Idol dies and there's 2 left, it goes 50-50 instead of a third across the way. Or if all 2 die and 1 lives before the policyholder dies, well, then they get the whole thing. So, and you can take the space up. In my experience, I do this all the time. You can take the space up in the primary and the contingent space, just kind of write it all down. It doesn't matter to them. They understand what you're trying to accomplish, and they'll make sure to do it. No problem. Rob? Todd asks, so you have the prospect cancel the current on the spot. This is because you know your policy will get issued. Yes. Shouldn't they cancel once ours gets issued? Good question. So once it's approved over the phone, not issued, it's effectively kind of the same thing. Once it's approved over the phone, that's enough comfort level for me to go ahead and ask them to cancel their policy. Worst case scenario, if something pops up that was unexpected, then you can reinstate their policy. Usually there's a 30-day grace period that they just have to pick the phone up and get the policy back on the books and catch the premium up. But if you want to play it extra safe, then don't cancel the existing coverage until you get the policy delivered to them. If you'd prefer to do that instead. And some of your prospects will want to do that instead. So it's really a personal preference thing. Like with me, I'm not going to ask my clients to cancel their existing coverage if I'm just doing a non-point of sale carrier. I'll say, look, I think this is going to go through. I feel pretty good about this, but let me call you back in a week to make sure this gets issued. My assistant will call you or I call you, then you can call to cancel. But most of these companies that we work with are going to give you a decision on the spot, the ones I like to work with. And so I trust in their guidance enough that I'm willing to go ahead and get the other incumbent policy out of the house. You're welcome, Oricus. Sam asks, I see a lot of funeral homes aggressively pushing pre-need in Texas. Yes. I mean, you see that. I see it all over the place. I see up here in Tennessee and East Tennessee, direct cremations, $700, $1,000 to get cremated, like the bargain basement stuff. Even amongst the funeral homes here, there's a ton of competition. There's a town up from me that's one of my favorite places to work up in Cleveland. It was about 4 years ago, this place called Companion Funeral Home opened up. It used to be a pet crematory, of all things. And they got smart and said, well, there's a lot more money in people than there is pets. And so they changed their pitch, and they became a discount funeral service provider. So they do cremations on the cheap, and they do burials on the cheap. I've seen them do like $3,000 or $4,000 in coverage, or $3,000 to $4,000 for casket, opening and closing, service, and everything, versus what the other guys in town charge like $8,000 to $10,000 for. I mean, it's just vicious. And so, yeah, there's a lot of that pushing. But ultimately, remember, all of this serves as awareness to our prospects. A lot of these people we sell to, as you know, Sam, they're never going to walk in a funeral home. They're not going to be in any position financially to deal with it. And many of these people are just paranoid of the funeral service providers. They don't like them. They think they rip people off. They have this disgust for them, and they know they need coverage, though. And that's where we come in, because we can avoid the uncomfortableness of having to deal with the funeral home, but also get them coverage at the same time. Yeah, you're welcome, Daniel. I'm more than happy to provide it. Sam asks, stop the bank draft is usually just what happens. They cancel their next payment. Yeah, that's actually a really good explanation, Sam. Thanks for providing that. So, Todd, if you're still on, what Sam is saying is if you just tell them to stop the bank draft, then technically the policy isn't canceled. But if you don't pay the premium on the direct bill notice, it cancels itself out, right? If the company gives you 30, 60-day grace period to catch the payments up, it will self-cancel, but without canceling, if that makes sense. So that's a really good way without potentially saying, oh, now you're going to reinstate it. So glad, Sam, you provide. That's really good. Daniel asks, which companies would you recommend for a new agent? It's funny you ask that, Daniel. I'm going to be doing a live stream. I don't have the schedule. It's this week or 2 to 3 weeks away, where I'm going to talk specifically about which carriers to choose are best for final expense, or what carriers as a final expense agent new to the business should you select, and what should you look for. As a strategy, new agents with me start with 3 carriers. I'm preferential to, I'll mention them very briefly. One is Trinity Life, or Family Benefit Life, excellent carrier out of Oklahoma. And then the other one is Security National Life, another really good carrier out of Salt Lake City. You need carriers, first of all, that give you a balance between pricing, a balance between underwriting, and definitely a balance between agent friendliness. That's huge. There are carriers that are good, but just are absolutely terrible when it comes to functionality for a new person. There's one in particular that I like to write, that pays well, that underwrites well, and you guys who work with me know what I'm talking about. They're a nightmare. If you're not a detailed person, then the odds are very high that you're going to have amendments. Does that sound familiar out to you guys out there? And the more problems you have like that, the less likely you are to actually get the policies issued. In fact, this particular company said, I think 40% of its policies that get submitted don't get issued. That's huge, and that means a big percentage of them most likely are because they got all these dumb amendments that require second calls, third calls, and a lot of agents, are ready to jump off of a building when they're dealing with this stuff. So there's a couple there, Daniel. The third, fourth, fifth, those are all kind of supplementary, optional kind of carriers. Andrea asks, what does a trans amendment? Trans amendment. I'm going to start using that one. Andrea asks, what does the accelerated benefits rider waiver form that comes with most apps accomplish? The prospect signing that they're aware of. I don't really even explain that in too much detail. Essentially, if they get diagnosed with a terminal illness, depending on the carrier, 6 to 12 months, the doctor says you got to live, then they'll accelerate the death benefit payment to the client so they can spend all their money now versus later. I'm pretty sure you have to be out of the 2-year contestability period to get that. I don't spend much time on it because I don't want to fill the minds up of my prospects with stuff that really don't matter either way. So, but they sign it. It's what you normally do. But I just basically explain it to some extent. So, anyway, guys, I appreciate you joining me today. If you've got any other questions, feel free to leave a comment in the box below. If you're interested in joining the mentorship program or learning how, you can click on the link down here in the description, and you'll reach out to me in my contact box. I'll be happy to give you some more information on how that process is. Of course, I'm still selling final expense Facebook leads. They're doing pretty well, getting leads consistently back. So if you're interested in trying out a batch, we are doing so. And if you click the link at the bottom down here, you can find out more there, as well as the avatar leads that we provide too. So I will see you guys next week live at 12 p.m. Eastern, 9 a.m. Pacific on my No BS Final Expense Training show, talking about some training topic about final expense. Daniel's last question, you sell people in their 30s and 40s and so on? Yes, I do, sometimes, but not all the time. If you want to leave a comment, I'll give you a little more explanation, but mostly it's people 50s and above, preferably late 50s to mid 70s. All right, guys, so thanks again for joining. We'll see you next time. Y'all take care, okay? See ya.